As the U.S. and China continue to march towards a trade war, beef producers are among those that may be caught in the crossfire. Recently, President Trump proposed adding billions of dollars in tariffs to Chinese imports as part of a crackdown on what the president characterizes as unfair trade practices. In return, China has announced it will impose tariffs of its own on hundreds of U.S. products, including beef. Here's Russell Nemitz with more from Washington, D.C. on the overall U.S. beef export picture and what this trade dispute could mean for members of the beef industry.
Well, in today's U.S. beef cattle industry, no doubt trade has certainly become a very important component. And with us on the program now is Kent Bacus, and Kent's the NCBA's International Trade Director, and trade is also back in the headlines here of late. Let's first talk about the ongoing renegotiation right now between the United States, Canada, and Mexico regarding NAFTA.
Well, NAFTA has been a very good trade agreement for the U.S. beef industry. For the 25 years it's been in place, we have seen our exports grow exponentially to both Canada and Mexico. Mexico has become a great market for a lot of cuts Americans find less desirable, especially tongues and rounds and things like that we just can't sell at a premium here, but we can sell at a premium in Mexico. Obviously, we don't want to jeopardize that access, so our conversation with the administration has really focused on protecting what we have. Don't jeopardize that access that's driven a lot of value to our producers. And so we're optimistic that the negotiations will conclude sometime in 2018. There is a push to try to see the negotiations conclude in May. Given the upcoming election in Mexico and the pending elections in both Canada and the midterm elections here in the United States, there's a big push to try to get some conclusion to these negotiations. So we'll see what happens there. Anything can happen depending on the news cycle. So we're going to keep monitoring that. But I think so far, ag is going to come out on top. I think that in the end, we'll continue to enjoy those benefits that are driving about $75 per head just to trade with NAFTA countries.
Let's take a look around the globe now. We just mentioned what's happening here in North America regarding trade with Canada and Mexico, but what about in that very important region of the world called the Pacific Rim? Let's start with Korea, because there's still a lot of excitement there for U.S. beef.
You're exactly right. Korea is one of our top export markets. It was our second largest export market in 2017. It's a $1 billion export market for us. That is something that we're enjoying right now, primarily because of the terms of the Korea-U.S. Free Trade Agreement. Under that agreement, which was implemented a few years ago, our 40% tariff we were facing prior to that agreement is now phasing down to zero. And so that's given us a competitive advantage in a very, very good market. Korea, again, they buy a lot of products that Americans don't want, a lot of short ribs, a lot of tongues, and they pay good money for it. So we have been so successful in Korea that we have now surpassed Australia as the #1 import source in Korea. That's something we want to hold on to. So there was a push to renegotiate the terms of the Korea trade agreement, and fortunately ag was not included in that negotiation. That's something NCBA really pushed, is to hold on to those terms that give us that advantage. So we're happy to see hopefully a successful conclusion here very shortly, so that our negotiators can focus on other Asian markets.
That's a perfect segue, if you will, into another very important market for U.S. beef, a long-time trading partner of U.S. beef, and that's Japan. Where are we at with the Japanese these days?
Well, Japan is our biggest export market, roughly $2 billion in 2017. It's been a great market for U.S. beef. That's our top market for tongues. It's our top market for a lot of cuts. But really, the biggest impediment we face is a 38.5% tariff. We were hopeful that if TPP would pass, the Trans-Pacific Partnership, we would see that 38.5% tariff go to 9%. But the Trump administration withdrew the United States from TPP, and unfortunately, the remaining TPP countries moved forward without us. So our competitors in Australia, New Zealand, Canada, and Mexico will all enjoy that lower tariff rate, but the United States is still stuck at 38.5%. we've made a lot of gains in the Japanese market, primarily because Australia has been in a severe drought, but also there's a lot of demand for U.S. beef. We need to capitalize on that market demand, but that massive tariff is going to stand in the way, and if we don't do something to address it soon, then we could lose a lot of the ground that we've gained in the last few years. So, our big request for the Trump administration is, if we're not going to move forward with TPP, then we have to prioritize a bilateral free trade agreement with the Japanese to give us a level playing field or a better deal into that market.
And finally, I just wanted to ask about a big potential market. Lots of celebration last summer, the reopening of that huge Chinese market to U.S. beef again. All things considered, where are we at with that huge announcement last summer to today?
Well, we were very excited last year to see the Trump administration successfully reopen the Chinese market. We've been out of that market for 13 years. That's a market that represents 1.4 billion consumers, a middle class that's larger than the entire U.S. population, and really a country that just started importing beef in record numbers just a few years ago. There's a lot of unmet demand and a lot of potential we have in that market. Unfortunately, we still face some restrictions. We face restrictions on the use of hormones and beta agonists, technologies that are widely used in our industry. They're science-based and very safe, but China has laws prohibiting those products. So we're trying to work to hopefully ease those restrictions and let us really capitalize on the potential in that market. But even with the access we have now, we were still able to sell over $30 million of beef into China in the first 6 months. But that's just the tip of the iceberg. We want access to that entire market. We want to have the Chinese consumers be loyal customers because we produce a superior product, a great product that is very popular in Asia. And we see a lot of potential and a lot of positive growth for U.S. beef and Chinese consumers. And that's important here because we need stability, we need growth. We've got a lot of beef that's going to come onto the market here later this year and into next. We need to be able to move it because that is an important value add for our producers. Exports account for about $300 per head. We want to see that number grow, and we want that to be a driving part of our success in the beef industry.
And that $300, folks, is some real money. Kent, thanks for being with us again on Cattlemen and Cattlemen.
Thank you very much.
Again, we've been talking with Kent Bacus, the NCBA's International Trade Director.